Welcome back to this video, guys. Now I'll be putting everything together that have shown you throughout this course, and now I will put it together to do my technical analysis to get my confluence to enter my trade. So I'm going to start with my top-down analysis from my, let's say, my 4-hour time frame. So remember, guys, I'm putting everything together now to get a nice trade. So I'm going to do one sell entry. I'm going to look for one sell in the market. Then I'm going to look for one buy. Okay, so right here is just resistance right here. You know that resistance pushes the market down. So as you can see right here, resistance pushing the market down right here. So now we're going to see how we would have caught an entry right here. So now we're going to go down to our 1 hour time frame and see if it correlates with this. So yes, the 1 hour time frame correlates with the 4 hour time frame. As you can see right here, respecting the same resistance zone right here, as you can see right here, guys. Now we're gonna go on our 30-minute time frame and see if there's a possible candlestick pattern that could give us an entry as the market is at major resistance, which is a 4-hour resistance zone. So we have two confluence already. We have one confluence is that the market is correlating. So the 1 hour time frame and the 4 hour time frame is correlating. So now right here, I'm gonna check my 15-minute time frame to see if there's any bearish engulfing right there where I could enter this trade. Okay, so this candlestick right here would be a great one to use to enter a trade right here. So this candlestick right here, I'm gonna go in further. So this candlestick right here is gonna be used, we're gonna use for our sell entry right here. So seller scheme, a lot of sellers came in the market and took control of the market. Now, looking for my sell entry right there. I'm gonna put my stop loss above the previous high, which would be right here. Cool. So now, so at the stop loss is 60.2 pips. that is 0.3%, 0.33%. Now, our stop loss is placed above previous high. Our previous high is above right here. Now I'm going to show you how to set your take profit zone. Where you would set the area where you would take profit. Now, given that we entered this trade on a base of a 4-hour resistance. We look to exit the trade at a 4-hour support zone. A 4-hour support zone is basically where the market will be looking to push up. So this is where we would look to exit our trade. And as I can see right here, what the market did, the market went down and pushed back up of the same support zone that I would have used as the area of take profit. So this is how we enter a trade, guys. We doing our analysis. So this is a set entry, guys. This is how we do it. Now I'm going to show you a buy entry in the market now. For example, right here. This is that is a support zone right there. Cool, observed. Now what we will do now, we'll be going on our 1-hour time frame to see if the market is correlating with the 4-hour time frame. We want we want at least 2 time frames to be correlating. So yes, in this case, we have the 1 hour again and the 4-hour time frame definitely correlating. So we definitely looking for an entry around this area right here. Now guys, remember we sell at resistance and buy at support. So I'm going down to my 30-minute time frame to see if there's a possible entry right there. If not, we'll be going down to our 15-minute time frame to see if there's any possible entry. I'm not seeing any possible entry right here on the 30-minute time frame, so we'll go down to our 15-minute time frame. So let's see. We're looking for buys in the market. Okay, guys, there's no possible entry right here. No, we have to practice patience right here now. So we haven't seen any bullish engulfing or any bullish we haven't seen any bullish pattern that can say we can use and say, okay, we can enter or trade for a buy. So, and even the fact that the market is below our major support zone, we don't want that. We want the market to be above our support zone, not below it. So what we will do now is analyze our 1-hour time frame. So guys, now, okay, this previous structure over here was a downtrend. Cool. Now, as you can see, the market did this push up right here. So with that push up there from a low to a high, we're going to use our Fibonacci retracement tool. So from 100% to 0%. Now remember, guys, so a 38.2% is also a golden zone on your Fibonacci retracement tool. So you have 3 golden zones now. You have 38.2%, 61.8%, and 50% as your golden zone. Your golden, the 38.2 is not often used, but it can be used at times. So it's key to know that. So mostly when using your Fibonacci retracement tool, it is normally your 50% and your 61.8%, where the market will retest those areas. However, you have its times where the market will retest the 38.2%. So as I can see right here, remember I told you in a downtrend trend line, it acts as, right here, acts as resistance. So this is a diagonal resistance right here. All of this right here is resistance. Pushing the market down, keep pushing the market down. Lower highs and lower lows. Now, so lower highs and lower lows. Cool. Now what the market did, the market respected support right here, pushed up, break above this trend line, pull back to retest. So it retested the trend line and also break above, market break above. So this year now you have 3 confluence in one. Cool. First confluence. This area right here is a lower high point. The market break above the lower high, also breaking above the downtrend trend line. Then the market pulled back, retesting the 38.2% in line with both the trend line, the lower high zone, which is a resistance zone, turning to support zone. So right there we have 3 beautiful confluence in one. This is what you call a 3 beautiful confluences, which is confirmations to enter your trade. Now, seeing all of this, we'll be going on our 15-minute time frame now to look for a possible entry. So we're looking for a bullish candlestick or a bearish candlestick. Right, honestly, guys, my opinion of this, guys, is like literally, this is very easy to master. This is very easy to learn and to catch on to. Like literally, it's easy to comprehend and learn. This is easy to master, I'm telling you. The hard part of it is like literally, you have to be very disciplined. You have to be very humble and very patient, treating Forex like a business and not like a get-rich-quick scheme. So I'm looking for a candlestick, right? Somewhere to enter. Okay, so I'm gonna check my 5 minute time frame. I didn't see any bullish engulfing right there. I'm definitely looking for a bullish engulfing. And I didn't see a bullish engulfing right there, so I'm gonna see what happens right here. So I can get a 5 minute bullish engulfing. Oh my god. So there's no more space on the 5 minute. So what I will do, I'll go my 30 minute time frame. So given that we haven't seen anything to say to give us a signal to enter a trade, we have to wait. We cannot rush this part of it. We have to wait. So 15 minute time frame now. So having done all the analysis on your major time frame, when the market is at a major time frame and you're now waiting on entry, you have to just be patient with the 15 minute time frame. Keep a close attention on the 15 minute time frame, and you will catch a good entry once the market gives you it. You never try to predict you never try to tell the market what to do. The market will always tell you what to do. So you flow with the market. You always try to flow with the market. Never try to go against the market. If the market is going up, you're looking to buy. The market is going down, you're looking to sell. Okay, cool. So I'm gonna break this down a lot right here. So keep focused, guys. And remember, mind you, this is minor support and resistance zones. However, we have done all our major technical analysis, meaning we have identified our major support and resistance zones. Now, the reason why we're identifying support and resistance zones right here is so that we can get a good trade, because we have done all the analysis on our higher time frames already. So now that the market is at a zone for entry, we have to be just mark up our 15 minute time frame and see if there's a possible entry. If there's no entry, we do not take a trade. If there's no possible entry, we do not take a trade. And if we do not have enough confluence, we do not take a trade. So right here now, just push the market down right here. Market push down right here now. Pull back up. Making a lot of retests right here. So what the market basically did right here, the market created a higher high right here, which is a higher high. We see higher highs in a uptrend. Higher highs and higher lows in a uptrend. Now, what's key to note right here now, what the market did right here, at this higher low point right here, the market created another higher low right here. And the market had multiple weak rejections right here. When you have weak rejections right here, this means the market is failing to break below this level right here. So it has a lot of respect for this level right here. And as you can see, the market created a higher low point right here. So now what we would use, we use our trend line as another confluence. So this is 1, 2 connecting right here. Now, what would give us the signal to enter our trade would be this right here. this candlestick right here, I'm going to highlight it, show you. This candlestick right here. This is what I call a bullish pin bar. As you can see, it has a huge wick rejecting the sellers in the market. So what the market did, the sellers came down, push market up. However, the buyers came back strong and push market all the way up here, closing up there. This shows that the buyers are in control of the market and doesn't want to go down. Now, this is a signal for entry. And this is our 15-minute time frame. Now, what we will do now, so in this trade, we literally got like 5 confluences. Now, entry at the bullish pin bar. Now, we place our stop loss below a low or a zone, which would be right here. The market is below a zone right here. And given the fact that the market, we put our 4-hour support zone was, we marked out the chart on a 4-hour support zone. So we are looking to buy. We're looking to buy and taking, we're looking to buy in the market, expecting the market to go up and taking our profit at a resistance zone that could possibly push the market down. So what we'll do now, we will identify resistance zone, which is right here. So now this is the take profit area that we will be looking for. And we set the take profit to right here. So we are risking 32.6 pips to gain 228.2 pips. This is an example of how we enter a trade, guys. You see, example of how we would have entered our trade, and this is how we put everything together, guys, to take a trade. We do our top-down analysis to get our confluences or confirmation. Once we have good confirmation and time frame correlation, and the market is at a major support or resistance zone, we can take our time. We can start looking for entries if there is not if an entry doesn't present itself, such as a bullish engulfing or a bearish engulfing or a bullish pin bar or a bearish pin bar, we don't enter the trade. We wait until we see something that will signal us to enter a trade, such as a bullish engulfing or the bearish engulfing. If we do not see this in the market, let's just wait and be very observant at this point. So you can see, guys, this trade was successful, and please note that when buying in the market, you buy at support. When buying in the market, you buy at support. And take profit at resistance. When selling, so it's vice versa. When selling in the market, you sell at resistance. You sell at resistance and take profit at support. So that is that, guys. So remember, I entered right here from a support, pushing up to a resistance. Why a resistance? Because the resistance pushes the market down. It has strong volume to push the market down. So this is that is the best place to exit or trade. Now on the other hand right here, on the other hand right here now, we are selling in the market. So we're selling from a resistance, taking profit at support because the support will push the market up against us. Now, guys, this is how we put it all together. I'll do more of, I find doing this video fun, so I'll do more of these videos to show you how to put everything together to execute a trade.